I'm
Thank you
doing well.
so much for being here with me tonight.
You're welcome.
Sharing with everybody, the community, whoever watching this video now or after, an update on how the financial market doing. So let
Hmm.
me introduce you briefly to the audience.
Okay.
Welcome Ennio Longo. He's a certified financial planner from Financial Wealth Builder Inc. And I'm very grateful to have Ennio here today to share with us a quick update on how's the financial market doing and any tip for us to move ahead out of this time. So welcome Ennio. Can you briefly again share with us about you and your work, please?
Well, I'm a certified financial planner and a chartered life underwriter. I've been in the business since 2007. So I've been through a couple of very, very bad markets. This being the
Yeah.
second. As an investor, I've been through a number of bad markets because I've been investing for a very long time personally. But in terms of having clients, this is my second very bad market that's happening right now. Or, if I use the term very bad, but very bad is relative, let's just say it's a down market because
Mm-hmm.
there's opportunities that are presenting themselves now, and we should really change the way we talk about these things.
Mm-hmm.
Be afraid when markets go down. We should actually be uh, we should be ready to take advantage of them. Because
Yeah.
if you wanted to buy a car and the car that you wanted to buy, the dealership was having a 30% off sale, you'd be right there.
Mm-hmm.
The stock market is having a 30% off sale and everybody's running for the hills. So um, we shouldn't fear these times. We should actually embrace them and use them to our advantage.
Yes, I love how you use the word like embrace them.
Yes.
It's like a beautiful way to reframe everything. Yeah. So yes. So what is happening right now in the market, and like what do you see with like the people how they doing?
Well, it's interesting because there's a if you watch the financial shows, when the market starts to go down, they call it a sell-off, right?
Mm,
The sell-off would suggest that everybody's selling, but
mm,
for everybody to be selling, there has to be a buyer, right?
yeah.
So you're in your field, you can't sell a house without a buyer, right?
Yes.
So for
Yeah.
every stock that's sold, somebody's buying that stock. And when we say that there's a sell-off, people kind of become afraid, and their motivations are kind of driven by fear and greed as opposed to what's
Mm-hmm.
happening right now. And I read that in one of the big banks that they had $3 billion of redemptions in mutual funds just in March, which is a huge, huge number. And I'm wondering why people redeemed that money. Part of
Mm,
it, fear. Part of it was maybe lack of advice that they were getting or the wrong advice. And part of it was probably had to do with the wrong advice when you first initially invest the money.
mm,
Because you ask me what's happening right now, and one of the first things that anybody should do before they put any money aside to invest is realize that investing is for the long term.
yeah.
And if you need money in an emergency, that shouldn't be invested in the markets. Because while
Yes.
investments over the long term are anticipated to grow, there's volatility. They go up and down.
Mm,
And so what we're finding out right now more than anybody else is real, or more than any other time, is that you really should have 3 to 6 months worth of salary put aside in something that you can access. It could
mm-hmm.
be an account, it could be a money market account, it could be a bond, it could be a line of credit. Because if you don't, then you're forced to actually go into your investments, and you don't want to be
Mm,
now when they're down. You want to be participating in the market. You don't want to be getting out of the market. As in terms of what's happening, well, it's a very interesting time. Uh,
yes.
there, March was one of the worst Marches on record. However, for April, I think we're up in April. So
Mm-hmm.
the market really doesn't, there's really not a direct, you're never going to find a direct correlation between a piece of news and what's happening with the market or with a stock. Um, and people try and find that, they try and make that connection, and usually that's not there. But at the same time, there's a lot of people right now who want advice and are asking for advice, and so we're trying to provide that. What's happening with you though? Like, what are things still being are people buying properties? Are banks lending right now? What's going on in the real estate market?
You know what? Yes, definitely. It was initially predict a very strong spring market
Yeah.
prior to COVID-19. However, it's definitely a slower market for sure. We see a less of activity in terms of buying and selling. However, there's still activity. For example, for those who still need to buy and sell, in the case where we have a seller who already sold their home that need a new place to move in, and for those who need to sell, are those like need to relocate for work, those that need to downsize, and sadly, we see some people experience like going through the divorce
Mhm.
that still need to sell. So definitely there are still activity out there in the real estate market, but again, business is not as usual. We even though we are consider our service as an essential service, but business definitely is not as usual. So in my opinion, I advise my own client who really don't necessarily have to make transaction right now to hold off because of the social distancing, because of the job security, everything, and their comfort level. However, we do still work closely with the client who do need to make a transaction.
Mhm.
Of course, with the precaution, with all the safety rule in place, we do still serve the client from right now.
Yeah.
Yeah.
So what's going on with home prices? Because I do remember reading stuff that they were on the rise. Are they
Mhm.
they leveled off? What's going on?
Yes, so for the month of February, definitely like it was a very skyrocket month where there's a lot of multiple offer bidding. We see the home that like tons of offer, and definitely the price was rocket in February. However, things are slowed down right now, but definitely a lot of buyer out there looking to get in to bargain and get a good deal, but they haven't been able to do so with a lot of discount
Hmm.
because of seller who saw their comparable, like the seller who sold in February, then they expect those price. So definitely they haven't. We haven't seen any panic sale yet. So which mean um, we haven't seen the price really going down yet. They're just frozen,
Yeah.
right? There's less activity. That's it. Yeah, we will not be able to predict what happened in the next 1 month. However, as of now, it's just been a month since the whole thing happening. Definitely the price is kind of freeze right there, but haven't we as a kind of a expert in the field, we discuss and we haven't seen any panic sale yet.
Use the word there, prediction. And in my industry, everybody's always predicting. They want there's all the television shows, all the websites, they're all about, hey, what's going to happen, what's going to predict. And I
Mm-hmm,
quote by Warren Buffett, and I'm probably not going to say it exactly, but he said something to the effect that a prediction tells you more about the person making it than it does.
mm-hmm.
We can't predict. Nobody can predict anything. And
Yes,
so
definitely.
when you base your future decisions on predictions, you're probably going to be wrong most of the time.
Mm-hmm,
People could predict back in December, back when when COVID first came out, and China was the country that was affected the most.
mm-hmm,
There's a lot of manufacturing in China. I remember people were saying, oh, Apple might be affected because they do a lot of manufacturing, so they're going to delay shipping. That seemed to be the biggest thing. And
mm-hmm.
nobody had an idea that the economy was going to shut down like this. So when I hear people talk about, oh, market forecasts and so forth, those market forecasts aren't any good because what ends up happening is that they'll say, oh, we're revising our forecast. Well, how do I know that the forecast you're making now is any better than the forecast you had to make before? Because if you keep revising your forecast, what good is it? It's like you tell me, we're going to forecast a really sunny day. I go for a walk and it starts to rain. I don't. So, you can revise your forecast at this point.
Yes.
Oh, I'm caught without an umbrella. So
Yeah.
we never look at forecasts. We don't listen to predictors. That's what we call a loser's game.
Mm-hmm.
Loser's game because if you do that, more times than not, you're going to end up losing.
Yeah. So for your field, the investment, the financial, and is it a good time to buy for those who have some cash put aside? Is that a good time for them to buy now?
Okay, so I'm gonna say this by I'm gonna just give some general recommendations here, some general thoughts, but every is different. And in my opinion, you should never make a recommendation. You never should make a decision based on what you hear somebody say. Always understand how it's specific to you. So it is a good time to buy from the standpoint that markets are down. But history has shown that the timing of the market is less important than how much time you're in the market. Because
Yeah.
flips and so forth, and even the people that bought just before the market went down, over the course of the long run, they're still going to get good returns. The question should be less about what the market is doing and more about what your personal situation is.
Yeah.
For example, if you have some money right now, but there's a chance that you might get laid off, or the chance that you might not be working, then it's better put aside to make sure that you have that 3 to 6 months, and preferably 6 months worth of income put aside. Any investment shouldn't be the end goal, because you shouldn't be just investing for the sake of investing. What you should really be doing is you should be creating a financial plan. And that financial plan includes investments, but it also includes a tax strategy. Includes asset protection. It includes your real estate. It includes how to pay your mortgage. So one of the things we talk about people all the time is, how do you pay off your mortgage? And we show them the right way, because if you pay it off the wrong way, it's going to cost you a lot of money. And it's not what a lot of people think. Because when it comes to mortgages, the interest rate is only one factor in determining the cost. There are a lot of factors that determine the cost, and sometimes people are surprised when they find that out. So if you want to draw an analogy, a lot of people think, hey, if I buy this investment, I'm going to do. So it's just like saying, if I go and I buy the best set of golf clubs, then I'm going to be as good as the best golfer out there.
Yeah.
So the club is not going to make you a great golfer. The hockey stick is not going to make you a great hockey player. It's the learning, the strategy around it, how you use those things, that's going to make you successful or not. So it can be a good time for people to buy. When the markets are up, it also can be a good time for people to buy, but don't focus on what the markets are doing. Focus on your own financial plan. I mean,
Yeah.
think about, real estate is now a good time to, you can say to somebody, it's now a good time to buy. But is it driven more by the market, or is it driven by what's happening personally? Like,
Yeah, I totally agree with you, and that's what the advice that we as a team been giving to our client lately, is that when someone reach out to us and say, "Hey, market is going down, should we buy?" and we sit them down and we kind of look at the overall situation, and the first question that we ask, that which is parallel to what you just say, is that we really ask them, what is their situation? Do they need to buy? Like, let's say if someone who need more space because they growing their family, they need more space for the kid, or so those are questions that we ask. Do you really need to buy? And then secondly, job security, right? Because that's the main focus right now, where yes, you can afford to buy now, but do you have a job security that down the road in a few months, is that secure? And then third question we ask them is that, what is their comfort level of buying? So definitely I totally agree with you, and it's also similar to what you just say, is that we ask them, we even if the market is really high right now, it's still good for them to buy if it fit their scenario, their situation. Yeah.
One of the things that would frighten me is if somebody made a decision based on incomplete information. So, for example, let's say that somebody has money that's earmarked for something, right? It could be whatever it is. It could be a real estate purchase. It could be something else. And then they see the markets are down, and they go, hey, everybody's saying it's a good time to invest, and I should take that money and put it in. And that's really, really dangerous. And I'll tell you why. Because they're making an emotional decision about investing. And they're probably thinking about, hey, now's a good time to double my money or triple my money, and investing that way. Investing doesn't work that way. Investing is a long-term approach. But investing will also have short-term volatility, ups and down, ups and down. So
Mhm.
somebody has, they want to put a down payment on a house, and they probably have like 150,000 ready to go as a down payment. Which, in the Toronto area, that's pretty much what you need as a down payment on a house.
Mhm.
And they see that maybe now's not, they see maybe that there's not a lot of inventory on houses. And so they think, hey, why don't we take this money and see if we can make a little bit more money on it and then put it into a property. What's
Mhm.
likely to happen is that as the market starts doing this up and down, they'll put that 150 in. And that 150 might drop to 140,
Mm.
right? That's very possible. It might happen the next day. It might go to 160, but it also might go to 140. You never know what's going to happen to that money.
Yeah.
The problem is that humans like certainty. They don't like uncertainty when it comes to investing.
Mhm.
And what is they'll get afraid and they'll make decisions based on fear. They'll sell out of that investment at 140 and lock in a real loss. And then they're going to be in a bad situation because they said, wait a second, I had that money set aside for my home, and now I'm not going to have it ready for my home anymore. What do I do? And then it's going to further delay the home purchase. So you really have to be disciplined. And
Mhm.
and I heard a very interesting stat. It said that when markets go down, 67% of the people who are invested feel anxious. However, when markets go down, 75% of the people who are not invested also feel anxious. Everybody, you have the people who are invested in their fear is generated around I'm losing money. You have the people who are not invested, their fear is generated around I'm going to miss an opportunity to make money. So
Mhm.
if we make decisions based on fear or greed or any type of emotion like that, we're going to hurt ourselves because we don't have a plan. We're just reacting. And you shouldn't
Yeah.
react when you're doing this. You should have a strategy and you should adhere to that strategy.
Mhm. Yes. So, what is happening with your client right now? What are you seeing with them? Like, do you see like also they like very anxious and reaching out to you quite often? And what is their reaction right now?
Well, we are extremely busy, which is a blessing, and I appreciate the fact that we're busy, and we're busy for the right reasons. Whenever we bring on a client, if the client says, I want to invest with you, we're not just going to take money and invest. We go through a very lengthy process. It's a three-step process, sometimes even more. And
Mhm.
what happens is we go through a very educational approach about why we're investing the way we do and how we invest.
Mhm.
We set clients up to be prepared for these types of market downturns. We don't know when they're going to happen. We just know that eventually they'll happen. So their portfolios are set up to take advantage of this. So the majority of conversations I've been having with existing clients have been clients getting us more money to invest that they have available to invest, which is very, very good. However, there are a lot of people who are coming to us that are new prospective clients because
Mhm.
they're that 75%. They're like, I know I want to do something, but I don't want to make the wrong decision. Or they get referred to somebody. So there's a lot
Yeah.
of people that are speaking with us because they realize they want that advice or they're coming to us from another financial institution. So while the big banks had, while that one big bank had a lot of money leave, we've had we've had investments come into our organization, which we're very proud of because to us that's validation that we're doing the right thing, and
Mhm.
nobody's taking money out, which is fantastic.
Oh,
'Cause,
that's wonderful. Yeah. So no one like kind of act on fear or panic sell.
no, no, and when you look at what we do for clients, right? So we do investment planning, we do estate planning, we'll do
Mhm.
tax planning, asset protection, all of those things. But one of my favorite job descriptors of what I do is behavioral coaching. Like I'm the investment psychologist. So
Yeah, behavior coaching. Yeah.
is we're having those discussions about the psychology around investing, and that's one of my favorite things to have. And you know what? It's a great conversation that I have with clients, and I enjoy that conversation with clients because we do this on a regular basis. And I'll have right now, it's about 5 or 6 meetings a day I'm having with people. So it's happening all the time, all the time. But somebody who's you know a client of mine who does something else, that's not what their focus is all the time. So our job here is to make sure that, we have the conversation, that we refocus, that we're making good decisions, and that we're not destroying wealth, that we're helping to build wealth.
Yes. So we kind of, I love how you name like a job description, like a behavior
Well,
coaching.
it really is. I mean, when you look at what we do, it was Warren Buffett's mentor, Benjamin Graham. So a lot of people are familiar with Warren Buffett. Warren Buffett learned from somebody, a professor, Benjamin Graham. And Benjamin Graham said that an investor's biggest deterrent to their success is actually their behavior. Before this happened, I'll share a story with your audience. Before the market dropped, I was looking at Tesla. It was a very interesting stock, not because I wanted to buy it. I wasn't interested in buying it. But what was happening with Tesla was really, really interesting, because Tesla was selling for about $500 a share in mid-January. And then earnings report that came out, and all of a sudden it started to take off. But I mean like a direct, almost take off like that. And it went to 700 within a couple of days, and then it got as high as $968. So this went from $500 to almost $1,000 within a week and a half, right?
Wow.
But somebody bought at $968, and it topped out over there. And they bought because of the fear of missing out. And along the way, somebody who had it at $500 sold it at $600, $700, $800 and made some.
Yeah.
But somebody that then bought at $700, when it started to drop, because it dropped as much as $300 to $350, they might have sold that. Because if you're buying based on emotions, you're also going to sell based on emotions. So Tesla had this big, it was like a huge roller coaster. Canada's Wonderland doesn't have anything that had ups and downs, right? And that was all since the beginning or the mid of January to pretty much the end of March. It wasn't a very long time period. So when people ask me, is this a good stock to invest in? It's almost, I tell them, well, what difference does it make what the stock is when your behavior is more important? Because whether Tesla was a good stock, a lot of people made a lot of money during that time, and a lot of people lost a lot of money during that time. And some people on the same transaction made money while somebody was losing money on that same transaction. And there's smart people on both sides of that trade, and there's not so smart people on both sides of that trade. But the point is, when you're looking at that, it's their behavior and not the actual investment themselves or itself. Because, if I look at your industry, and I'd say to you, how much does a 3,000 square foot home in Toronto cost? Well, we're in Toronto, right? In New York, downtown, Etobicoke, Scarborough, Midtown.
Yeah. Or New York, or
Real estate has these micro markets, and 3,000 square foot here is different than 3,000 square foot here, there, et cetera, et cetera. So when a client comes to you, they need, you're helping them also with the pricing and helping them understand, what the market is like and if this price is set properly and so forth. With investing, you and I and anybody watching right now, we can all log in and look at the price of any stock, and it's the same for all of us. So because it's the same for all of us, the decisions that we make have a really, really big influence in terms of how successful we're going to be, right?
Yes.
And they need our advice in certain areas, and they need your advice in other areas that are different than ours, right? They still need that advice, because from a pricing standpoint, you play a bigger role than we do as financial advisors.
Yes. So definitely, we helping them to one of the biggest investment in people life, which is real estate, right? Yeah. So it definitely involves lots of emotion on it. So we have a few clients during the months of February where we lost a couple of a bit. However, as a team, we know their budget, we know their goal, and we know their situation. So we try to kind of help them with the emotion, and then we prep them before the offer day, which let's not buy on emotion, right? Because we know their budget, their their goal, and if it's not meant to be, then it's not meant to be. So some of them were very afraid of the bidding war, and they say, forget about whoever, like how many bidder out there or how many offer. Just know your plan, your goal, your budget, and we come in with the best. And if some other people buy based on emotion, or some people willing to pay premium, for example, some of them that need to move on that street because their parent live on that, so those buyers willing to pay a little bit of premium to get in that street. So let them bid, but if you don't have to or you cannot afford that, then don't be, right? So a lot of them, we are trying to hold the hand and ask them, please don't buy, don't do that.
So,
Yes.
so
So
hear from you is that sometimes that these decisions are they're not really financial decisions; they're life decisions. Because
mhm,
real estate, especially your primary residence, is a life decision. It's not a financial decision. Correct?
mhm,
That's
yes.
correct. And let me ask you another question. Have you ever been in a bid for a client and they didn't get it and they thought it was the perfect property, and then the one that they ended up getting was better than the one they lost?
Yes, definitely. Like,
Yeah.
actually, it happened to my client and also for my own as well. So I always say, if you believe in it, it's meant to be, right?
Mhm,
If you lose on that property, perhaps it's because it's meant to be. Of course, some case is depend on, is also depend on the strategy as well.
mhm,
But most of the time, if we, like, really bang on the strategy, the plan, then it's just the mean to be
mhm,
their property. And same with us, like, for my own personal, my husband and I, we were bidding in one of the, and we lost it out.
mhm,
And I, because at that time, my son, my oldest son, was about to start the junior kindergarten, and I just love to be in that area to send him to that school.
mhm.
And we lost on that, and we were a bit, sad. And you know what happened after the beating? Everything after everything happened, then we figure out that that house, some I think an elder person
Mhm.
passed away in the home,
Okay.
which for us, like, we sit in Asian, we as even if our parents hear that, they would not happy if we buy that house.
Yes.
So it's something, not meant to be our home. We never move in that neighborhood. We still remain where we were. But yeah, we it meant to be not our home.
Can I ask you another question? Um,
Sure.
have you ever, when people tell me that they want to buy a house,
Hmm.
and they say, we're going to talk to a real estate agent. I always tell them, before you talk to a real estate agent, talk to a mortgage advisor, because don't you need to know? Like, they can come to you and they say, well, our budget is 800,000, but they sometimes don't know what their budget is. Like, correct me if I'm wrong, because they think that they want an $800,000 house, but then, they have maybe 100,000 they can put down, and they're only allowed a $400,000 mortgage. So
Hmm.
the first stop at least be calling a some type of mortgage advisor, their bank, and say, listen, can you give me an idea in terms of what I'm approved for? Because it's not a good. I mean, you tell me. What do you think?
Yes. So to answer that question, yes and no. For like, let's say if someone approach us,
Yeah.
of course, first thing, as a team, we do a pre-screening, for that, like, to get a rough idea of. So we kind of did a brief screening before we pass them on to our mortgage broker.
Okay.
But definitely, the first step in purchasing a home definitely is to figure out how much you can afford, which means you need to know how much the land going to lend you, and also how much the down payment that you have saved. And so by meeting with us, our team, we definitely we pre-screen them first to get them to give a rough idea,
Hmm.
right? And then we will work closely with the mortgage broker
Hmm.
to get them the financing. So yes, definitely the role of the mortgage broker come in. However, based on our experience, we figure out that depend on who they talk to as a mortgage agent or broker.
Mhm.
That's when they whether they get uh, the purchasing or borrow amount less or lower, or the rate favorable or not. So it's really depend on who they talk to first. So let's say if someone that directly go to the RBC, like to talk to the branch, and get the mortgage. However, they don't know based on their situation. For example, someone is a newcomer to the country,
Mhm.
or someone as investor, or it's really each bank have a different program, right? So first stop, of course, before you purchase a home is definitely we all advise to talk to the team, like real estate agent team.
Mhm.
So because they've been working closely with different mortgage broker, and of course each team have their kind of in-house mortgage broker that work closely with them to facilitate the sale. And based on the client situation, we will be able to advise them who to talk to first to
Okay.
get the financing that's favorable to them. Of course, at the end of the day, you do, if you get financing, you will get financing if your situation allow to, which is based on the job and the income and the saving, right?
Yeah.
But what I mean is that favorable is that who do they talk to first as a mortgage agent or broker,
Mhm.
and the lender is very important.
Yeah, that's no, that's fantastic. They really need to do that integrated approach because sometimes, what's the expression? Sometimes your eyes are bigger than your stomach, right? So
Yeah.
be the same thing when you're buying a house. I wanted maybe to share something with your audience
Sure.
regarding.
Yeah.
So, I mean, I don't do mortgages. I don't know them as well as a mortgage broker does, but a mortgage is part of your financial plan.
Hmm.
Mortgage is traditionally, the house is usually somebody's largest asset. The mortgage is usually somebody's largest payment on a monthly basis, bigger
Yeah.
payment and et cetera. So whenever you have a mortgage payment, you have any other payment or expenses, what you have is you have your present lifestyle fighting against your future lifestyle.
Hmm.
All you're paying against the mortgage, you're not putting away for the future, and it may impact how you're going to retire later on or the things that you could do.
Hmm.
I know that depending on what your mentality is, depending on your background and how you were raised, I know that I was raised with debt is bad, debt is bad, debt is bad. And
Yeah.
I want to tell people is that there's a difference between debt and being in debt. If
Hmm.
used properly, it can help you get to where you want to go, but you need to use it properly. And
Yes.
one of the things with mortgages are, think about it, if you and I both buy a house today, and we both take a 25-year mortgage, and we both buy an identical house, and you decide to pay off your mortgage within 5 or 10 years, and I decide to pay off my mortgage over 25 years, in 25 years, both homes are paid off, correct?
Yeah.
25 years, both of our homes are going to be worth the same amount of money, correct?
Hmm.
So now we both have the same, we both don't have debt after 25 years. We both have an asset that's worth the same. Now the question remains, how much money do you have in the bank and how much money do I have in the bank, right?
Yeah.
And what we tell people is that time in the market is more important than timing the market. And one of the things that I go with through clients is I go through this mortgage scenario and I show them, listen, if your mortgage is at 2 or 3%, and it's possible for us to put you in an investment that pays more, let's say it pays 7% over the
Hmm.
25 years. If I had $7 and you had two, you would do the exchange. But if you had $7 and I had two, you wouldn't do the exchange. So what
Hmm.
we're doing is we are sacrificing our future because we're concerned with our present. Now, again, people need to get proper advice and they need to get individual advice. I'm not suggesting anybody should do this. I'm saying this is an idea, something to think about.
Hmm.
But the other thing you need to think about is this. Let's say you get a mortgage and that mortgage is $2,000 a month. So today that $2,000 mortgage is $2,000 a month. Next year, you're still paying $2,000 a month, but that $2,000 isn't worth as much as it used to be.
Yeah.
And next year, that $2,000 is worth less and less and less. So every year that goes by, that money that you're paying towards the mortgage is worth less because of inflation. So that would suggest to me that the dollar you have in your pocket today is
More, yeah.
more powerful than it will ever be. So
Yeah.
I usually tell people go shopping. Don't go shopping, but let's say you order something online, right? So you order something from a grocery store online and it comes to you. Keep that bill. April, what day is it today? April 14th.
14.
Next year, go and buy the exact same things from the exact same store and see if it costs you more or less.
Yeah.
And my guess is it's going to cost you more to buy those same things.
Yeah.
We're paying the mortgage off really quickly. Is it a financial decision or is it an emotional decision to say, I don't want the debt on my mind?
Yeah.
What you'll find is that if your dollars are really, really powerful today, you're using today's money to pay off a debt in the future when you are better off using weaker dollars to pay off a weaker debt, right?
Yeah.
So don't put all your power in today. Let that money work for you. Don't make
Yeah.
your whole, make yourself whole. And I find that there's a lot of people today that have these homes that are paid off. And having $1 million home in Toronto that's paid off is not a big thing, right? Because that might be the average price in the GTA of a house.
Yes.
The funny thing is that when they bought these homes, they didn't pay them $1 million. They paid them maybe as much as low as $50,000, $100,000 because they've had them for so long.
Yeah.
And yet they were so quick to pay off a $40,000 mortgage that they don't have as much money for retirement today as they should. And think about it, if you and I had a $40,000 mortgage, we'd go, are you kidding me? That's not even a debt. $40,000 as a mortgage to pay off over 25 years, that's nothing, right?
It's nothing yet.
Nothing compared to like having a $300,000 mortgage or a $400,000 or $500,000 mortgage. It's still a lot of,
Yes.
don't get me wrong, but what we're talking about is relative comparison. I'm sure if you look at the average mortgage in Toronto, it's not 40,000. It's probably much more than that. But what is that price and cost are all relative, and so keep that money in your pocket working for you today. Don't give it back to the lender too quickly because they're
Yes.
it and lend it out again, and they're going to make money off your money, and you're not making any money off your money.
Yes. I really love this point that you just brought up, because it definitely, like you mentioned earlier, it really depends on the how we were raised, right?
Yeah,
Like, debt is not always bad if you like you if you're good debt, right? So if people in debt, definitely is not good, but you use that debt to leverage. Yeah, so I love this
let's say
point that you just brought up.
I'm not talking about a credit card bill that you've run up that has absolutely zero value and you have nothing to show for it. What I'm talking about is something to help increase your assets. And you think about mortgage, the first four letters of mortgage is the word dead in Italian, right? So
More.
you almost have that association with it, and it's something that is ingrained into people. And the funny thing is, I went to speak to some high school students not long ago. My brother-in-law invited me to speak to some high school students, and here are high school students who are concerned about having a mortgage in the future and that they're never going to be able to get ahead. And I said, well, why are you saying that? They said, well, everybody's telling us that. I said, don't listen to them. We don't want listen. You don't let anybody tell you that you can't do something, because if you're going to believe them, you're not going to be able to do it. So you can do these things. It's possible for you to do that. You just need to have strategies and advice. When we try to do it on our own, it's not going to work. Talk to somebody who is a fiduciary, somebody who is selling an investment, somebody who's looking at a holistic plan, and try and get a strategy around it to make sure that all of your pieces are working together. Your home, your investments,
Yes.
your insurance, your salary, any investment property, any other, if you have a business, etc. All these things got to work together for you to help you get where you want to go.
Yes, definitely. Yes, I love that advice, where because a lot of people, because I know a lot of bank allow the us to open, the self direct
Yeah,
account, where we just, can invest ourselves.
yeah.
And again, we not a full-time financial planner or financial advisor. So, and then we try to beat the market. Yeah. So
Yeah,
definitely, for myself, for sure, like I'm not gonna, you know like if I wanted someone like not holding me emotionally, like step outside of my world and see from outside and see holistically my whole financial like the package,
mhm.
and help me with to put things together. So definitely I don't recommend anybody to try to do it yourself or beat the market yourself.
So
Yeah, have some professional.
speaking of self-directed, I have an offer for your audience. For anybody who's watching, there's this great book called "The Five Mistakes Every Investor Makes and How to Avoid Them." It's written by Peter Mallouk, and Peter Mallouk is he's our U.S. partner. So we're partnered with we have an affiliation with a company in the U.S. And this is a book that he wrote. So I have 5 copies of these books that I will offer. The first 5 people who email me, they can just say, listen, I saw you on there and I want a copy of the book. This is my address and we will mail it to you. There's no obligation or anything like that. We like to share information. We want people to make good decisions. And this is a good read. It's a fast read and it's a funny read because a lot of people find finance dry because people get really technical. Peter's got a great sense of humor and we like to keep things simple, right? We don't like to use a lot of jargon because that really doesn't tell the client anything, right? It just
Yeah.
serves to confuse and like, what are you talking about, right? We want to make sure that we're understood by people.
Yeah. So for those who first 5 people that email you, is Ennio at fwb-inc.com.
Yep.
We'll get a free copy.
Just put in there that I saw
That's
on the Facebook Live and this is my address. Can I get a copy? And we will send it out to you.
that's so wonderful. Thank you so much for offering this gift to everyone.
You're
Ennio,
welcome.
thank you so much. Yeah. And so, any last tip or any insight, like briefly to share with the audience before we end the interview today, Ennio?
Yeah, there's a couple of things, and I've been doing this. I've been doing this quite a while, and like I told you, behavioral coaching is a very important thing, and I see how people react in terms of emotions. And what I found is that investments, the way people think about investments, is really like a microcosm of how they look at life. And what I found was that people panic when things are unknown, when there's uncertainty. And
Mm-hmm.
believe it or not, the the way that they react to the market when things are bad is the same way that they're reacting to grocery shopping and toilet paper and all of those things. I saw the same behavior, right? They're
Mm-hmm.
motivated by fear in the situation. And we did see some greed out there as well. So investing is really about uh, behavior. It's really about how we behave with ourselves. And one of the reasons that it's good to get advice sometimes is because we become very emotional with our own money and we don't
Mm-hmm.
make mistakes. And when you're working with a professional who's a qualified professional who is looking after you and puts you first in a fiduciary like standard as opposed to a suitability standard, and that's important. Are they putting you forth? Is it client focused or is it product focused? If it's product focused, they're just going to try and sell you a product. If it's client focused, then we're going to try and make sure that what's best for you. And what I would find really, if I kind of extend the metaphor, people would watch these investment shows too often, and they would say, "Well, I heard this and I heard that." And I would say, "That's all a bunch of noise because this is all the noise. This is information." And this little dot is what might be useful information to what we're doing, and it would sometimes get people off track. And watching the markets on a daily basis brings a lot of stress and anxiety. Well,
Mm-hmm.
with regards to COVID, I saw something the other day where the International Monetary Fund is saying that we might get into like another depression and so forth, and that's what they're predicting. And it's the same thing. People are watching the news on a regular basis. Control what you can control. You can't control the news. What you can control is how you watch the news and what you absorb. And don't
Definitely,
get
yes.
anybody's predictions.
Hmm.
Nobody can predict anything. If anybody could predict anything, we'd all be splitting the lottery every week, right? Nobody can predict these things. And all they do is they cause stress and anxiety.
Hmm.
Get a plan in place. Don't focus on 5 days, focus on 5 months, focus on 5 years, focus on 5 decades.
Hmm.
That's what you got. Because if not, it's going to drive you insane, right? Focus on the things you can control.
Yeah, I love that advice. Yes, like I love what resonated with me that from what you just mentioned is that it doesn't matter the time that you jump on the market. It doesn't matter the length of the time that you in the market, right?
Yes, exactly.
Yeah.
And there's a bunch of evidence to back that up. I mean, if we needed to, this discussion could go on for days, right? But there's so much evidence that the weight will you'll be crushed by the weight of all the evidence. It's just that
Yeah.
people want to find out. There's an opportunity for them to find out and make good decisions going forward and take advantage of what's going on today.
Yes. All right. Thank you so much, Ennio,
You're welcome.
for your insight, your time today. And again, for those who love to receive the free book offer from Ennio, the title is The Five Mistakes Every Investor Make and How to Avoid Them by Peter Malloch.
Yep.
The first 5 person who email Ennio will be receiving a copy through mail. So yes, go ahead and email Ennio. And yes, I really enjoyed the book that you gave me last time that you met from Tony Robbins. Thank you so much, Ennio, for
You're welcome.
your generosity and your sharing all the time.
You're welcome. Thanks
So
for.
here I will paste all your contact information
Hmm?
here. That for those who love to reach out to you, they can do so. I will post it here, all the information through the chat comment box. Yeah. So thank you so much for your time. I hope to be able to see you again soon in person.
Very, very soon in
Yes,
person. Yes.
yes. Please stay well and be safe.
Thank you to you too. You and your family.
Thank you. Bye.